welcome to another episode of Banking Matters. I'm your host, Elizabeth Holtrop, and today I am very excited to be joined by my coworker, Svitlana Keeney. I actually work with her here at Compliance Alliance on the Compliance Hub team, and I am really pleased that she's agreed to join us today to speak specifically to one of her areas of professional knowledge, which is working with trusts and wealth management within the banking services arena. We'll start with a brief bio, and then Svitlana, I'm really excited to hear your wisdom from you today. So Svitlana Keeney currently serves as a compliance officer at Compliance Alliance, where she supports the reviews and products team. Before joining Compliance Alliance, she was the compliance officer at a large financial institution. In her compliance role there, she helped businesses in managing a wide range of portfolios, covering areas such as wealth management, digital innovation, consumer banking, and lending, including to high net worth individuals. Svitlana, welcome to the podcast.
Thank you for having me. I appreciate it.
I'm really excited to hear from you today. Specifically, I know that we are going to talk about some issues surrounding trust and maybe touching onto wealth management because those can kind of intersect as topics. To start off, let's talk really broadly. Svitlana, let's talk about how a bank can stay compliant when offering trust or wealth management services. And to start off, can you tell us why and how compliance matters in this area?
This is such a good question. Why compliance really matters, especially when we're dealing with the trust services and you know, as you probably know, trust services can be as a standalone individual business within the organization, or could potentially be a part of such a bigger model, which could potentially be wealth management. So whether the bank is really new to trust operations or they have years of experience, compliance is really the foundation of sound fiduciary management. And I will probably emphasize it multiple times, fiduciary role, fiduciary management, because it really ties to the legal obligation behind the scenes. So it is really the foundation. And trust services can really vary depending on the type of trust involved, right? So some common trusts include revocable trust, right? So that can be altered at any point and revoked. We also have irrevocable trust that is pretty, tight, right? So cannot be changed after creation and offering certain tax or estate benefits. We have charitable trust, which is designed to benefit the charity, a specific charity customers or clients could have. We also have special needs trust, again, designed to really accommodate the idea of the care of a disabled individual and customer. And we have living trust, which is established during the grantor's lifetime. So really at the heart of the trust services is the fiduciary role, right? Which means acting in the best interest of a client. So when bank acts as in a fiduciary capacity, it is actually legally and ethically bound to put the client's needs first. So this really can include a number of things. So managing assets with care and prudence, then avoiding conflicts of interest, maintaining full transparency, that would include disclosures and so on and so forth, and acting with loyalty, right, and diligence. So with that being said, fiduciary responsibility really comes with increased regulatory expectations, right? And most banks already probably heard that and they experienced that. So banks that offer these services must comply with Part 9 of the Office of the Controllers of the Currency OCC regulation, specifically 12 CFR 9, which governs fiduciary activities of national banks. For state chartered institutions, it's comparable state regulatory regulations that will apply. And please keep in mind that the regulators expect precision, consistency, and integrity.
Yes.
So the bottom line is when you hold fiduciary powers, you hold trust. So both legally and ethically. So
I do think it's a good distinction you're drawing, which is that today we're talking kind of about the compliance side of maintaining policy procedures, the law which requires compliance. We do always, and I know Svitlana and you and I both have to draw the distinction that if a bank is asking about legal questions, they do have to go to their legal counsel. It's such a fine line, and sometimes banks even need help understanding the difference. Which is where sometimes like our compliance alliance services can even help them understand that, oh, this is a question you're going to have to take to your bank legal counsel. But it is interesting that we have to talk about compliance and legal issues in an area like this. And sometimes you got to separate them real carefully.
Exactly. And it is
in terms of
a really fine line. So
yes,
we need to, and that's what I always recommend that, the bankers and the financial institutions need to clearly understand their organizational structure, number one. Then they need to understand how how they offer certain products and services within that trust division. Yeah. Because that will set the tone what comes next and where you draw the distinction between the compliance and the legal obligation.
Yeah. And obviously the compliance flows from the regulators. Now you spoke just a little bit about, the OCC for national banks, the state chartered banks that have to look to their state rules. Is there anything else that banks should keep in mind in terms of regulators for trust activities?
Yes, this is actually a good point because so who are the regulators overseeing trust activities? We have a lot.
We sure do.
Such a complex place, but let's just name a few that probably could help define the blueprint for the compliance framework. And it really depends on the bank's or financial institution's charter. So national banks, right? OCC, it falls under 12 CFR 9, as I mentioned earlier. So OCC approval is required to conduct fiduciary operations. Now, we have state banks. So the state banking departments typically, sometimes with the FDIC oversight, right? So FDIC approval might be required to conduct certain fiduciary operations. So we have Federal Reserves for banks holding companies with trust subsidiaries, typically that where it falls into that bucket. So the requirements, of course, can vary by state, but the FRB may review trust activities as part of their safety and soundness. Just keep that in mind.
So that's a good point to keep in mind, that depending on the regulator, depending on the structure of the bank or the holding company, even the Fed might look at trust activities as part of their review as well. Banks really have to keep in mind a lot of different aspects when it comes to compliance.
And that's where this space is really complex, because it's not about one specific banking or lending product where typically you would see kind of a flat model across the business, the financial institution or organization from start to finish. This could be a package deal. So what is that and how it falls within the trust activity? I would say activities, because really trust is a relationship and it can really include a number of things. And the last bullet I forgot to mention, that would be Securities and Exchange Commission, because if a trust department provides investment services beyond traditional fiduciary functions, such as offering securities investments or advice to the public regarding those products and services, so additional layer of obligation is there, and registrations may be required through Securities and Exchange Commission. So that would be another consideration And I know that some financial institutions are really struggling to really draw that line in the sand, because
Yeah.
really this is a different set of regulations and laws that apply.
Hmm.
And again, if they have any questions regarding how trust activities, laid out and identify all those potential flags, they can always reach out to us and we can help
Yeah.
them providing additional guidance in that
Yeah.
respect. So
Yeah. So for any banks where they are kind of having difficulty actually figuring out what services they're offering, a really, really good idea to reach out and get some help figuring out if they are concerned that maybe there could be SEC rules that come into play. So often I feel like that banks do, if they have a trust and wealth management department, there very often are investments that are happening there. And that's a whole different package that banks need to be aware of, separate from traditional banking compliance, the
exactly.
investment compliance for sure.
Hmm.
I agree with that.
So really, to add a little more to that, so each
Mm-hmm.
regulator focuses on ensuring that fiduciary operations are well managed,
Mm-hmm.
properly documented, very important, ethical, and free from the conflict of interest. So
Mm-hmm.
so if you are to think like, well, where should I start? I'm like, that's how you should be thinking, because that's how the regulators will approach all the examinations and reviews. They will
Mm-hmm.
tackle it that way. So some key elements to keep in mind. The regulators would typically look at authorized fiduciary powers.
Okay.
What does it mean? Proper authority to act as a fiduciary. Trust powers granted by charter or regulator.
Mm-hmm.
Uh, Clear written policies and procedures. I can't stress it enough.
Mm-hmm.
This is a good bullet, because the first thing they grab, like, well, can you show us policies and procedures you have in place to operate that business? That's probably one of those first questions they might ask. So
Mm-hmm.
fiduciary policies and procedures that reflect the scope and complexity of the trust department activities.
Mm-hmm.
And I do want to put emphasis on the policies, because really it should be tailored to your business. It shouldn't
Mm-hmm.
be generic information or specific, like, well, this regulation says this and we are going to bullet out the requirements. Consider
Mm-hmm.
crafting your policies to outline the framework really, and how that those requirements really create that framework for your business.
Yeah.
So I see a lot of financial institutions making that mistake. They're creating
Mm-hmm.
a policy, and the expectation is that, yeah, we met that regulatory expectation. Well, what some of them may not be aware of, that the regulators could come in and say, well, can you please demonstrate how this policy fits your business? We do understand that this is the requirement. We do know the
Yep.
law and regulation.
Mm-hmm.
Please explain it to us how that fits your business. So another point is proper account acceptance and review. Account
Mm-hmm.
acceptance and review processes that document suitability and risk. Again, suitability is kind of a little sticky word in there, because if the business or the trust services are to offer investment advice, which goes
Mm-hmm.
beyond the trust services. They offer traditional services in that space. Then you kind of open the door. Now you have to be careful in terms of what's considered suitability and how you document that in your books. Ongoing
Yeah.
account administration, which is consistent with governing instruments. Make sure that you really follow the trust agreement and
Mm-hmm.
applicable laws and regulations. And of course,
Mm-hmm.
internal controls and audits.
Yep.
Those would definitely help to detect and hopefully correct the issues early in the process.
Yep.
Being
Yep.
proactive versus reactive. So it's always a
Yes.
good thing to have.
Yeah. So I feel like you laid out kind of four categories that are really important to keep in mind: your policy and procedures. And yeah, my apologies if I'm not using the same terms that you're using. One thing I pulled from there that banks need to be really mindful of whether they're crossing from the trust role over to the investment role, which is what we just talked about in terms of SEC rules. Um, uh, Account reviews. I want to go back to your first point about policy and procedures, though, because I think that's so important to keep in mind. Banks often will pull like a template policy. And even here at Compliance Alliance, we offer certain policies for banking issues that are template policies, but they are never meant to be simply a copy paste for the bank to simply say, this is our policy now. They're a starting point or a framework, usually, in most cases, for the bank then to craft them to meet their own business needs. So I do agree with you that I have run into examiners or regulators sometimes who are a little bit concerned if the policy seems too generic, because a policy really has to encapsulate what the bank is actually doing, or in this case, maybe the fiduciary party, which, we're talking about banks here as in a fiduciary capacity. Can you talk a little bit about just even any recommendation you would give to bankers if they are looking at a policy that seems too generic? What are some considerations where they might need to dive in a little bit more to tailor it to their institution? And of course, every bank is different, but just some of those areas where they need to look a little bit closer to make sure their policy is actually tailored to their practices.
That's a good point, and to something you just mentioned, yes, we do offer templates, really well crafted templates for the financial institutions they could use to design their own policy. But really, just the starting point is going to be, you need to understand the organizational structure. Yeah. Right. So by design, where does your business fall within the organization? Yeah. The reporting structure is important, because once you start crafting the policy, you will have, yes, of course, we have board is responsible in a lot of cases, responsible for the policies that are in place. Yeah. But we also have some other parties, and it could be trust officers, right? So what is their role? What role they're playing within that space and within the organization? Because that will help you with tailoring your policy to that specific area. Then another important point, and I know that some regulators are very particular. Please tell me, what are the roles and responsibilities for your group? Yep. And that's another component in the policy that you need to be, you don't need to write extensive information, but you need to be clear and transparent that this specific group is accountable for this activity, and this specific group is accountable for this activity, especially if you are to offer banking, lending, trust, and investment advice. That line should be clearly drawn in there. And of course, you, when you're looking at the law and regulation, you need to be thinking the way, okay, well, here's the product we offer, and then work basically in that direction. We offer certain banking products. Here's the requirement that applies, and here's what the bank employees should do. Or you basically set the rule based on the regulation that is out there for your bank, and based on your activity and, of course, complexity of your operation. So that would be the suggestion, how to look at the policy and basically design it based on what you do, how your business operates, and the product services you actually offer to the customers.
I think that is such an important emphasis, to actually look at what the bank is actually doing. because every now and then we run into banks that don't realize that they are actually doing something like acting in a fiduciary capacity. They may not even have realized that some form of what they were doing with handling a trust actually made them a fiduciary. So it's really, really important to like analyze and look at the actual activities of what the bank is doing, and then think about which compliance rules, which laws, whatever type of guidance would apply to that activity. Instead of the flip side, where sometimes banks will look at rules or laws or compliance sections, and they'll think, oh, that doesn't apply to us, and they'll move on, instead of actually looking at the bank's actual activities and then thinking about the compliance that flows from there. So I think that is such an important emphasis, and I appreciate you brought that up, Svitlana.
So another thing I wanted to mention, and I'm hoping just to highlight some things to help financial institutions to really craft their compliance approach. I'm saying
fabulous! I would love you to talk about that,
because this is really not the program. You can create a compliance program and build that into your program, which could potentially provide sustainability, which is really, really a good feature, let's just say, because really the regulators when they look at the compliance program, they look how this program can be sustainable. Is it a short-term, long-term? So really to stay compliant, really trust department may need to have a strong internal control, right? And sustainable compliance framework. So some key parameters, key pillars that you may want to consider: governance, a board-approved fiduciary policy, clear delegation of authority, and oversight from a trust committee. Then we have policies and procedures that we kind of covered that earlier. Make sure they're written. They're not verbal. They're written policies and procedures, regularly updated and reflecting really current laws, regulations, and the bank's own risk profile. Training is important. It continues education for trust officers, compliance staff, including the board, is really because in the fiduciary space, board has certain responsibilities, fiduciary responsibilities, and they're liable. So that can extend to the extends to institutions' directors. Monitoring and testing, regular internal compliance reviews and independent audits are the key. So the OCC really expects an audit of fiduciary activities to be done annually. So documentation and record keeping, if it's not documented, it didn't happen.
We've all heard that one.
Yep. So keep detailed records of the decisions and investment rationales and any discretionary actions. And another bullet, which is like so current, technology and security. So specialized fiduciary platforms really are crucial to maintaining the client confidentiality and ensuring secure management of sensitive data. Technology systems should be really designed to meet both the regulatory requirements and the client expectations for privacy and security. Another thing to mention, so be cautious of mission drift. Okay. What that means, extending services without aligning your policies can raise red flags for the regulators. So even seemingly small change, like adjusting the frequency of account reviews, can lead to potential issues and during the examination. So keep that in mind. If you are extending your service or adding new features to your product within the trust package, just make sure that you review the policies at the same time and make adequate changes, because that might have an impact. So let's talk a little bit about some common compliance pitfalls. Mm.
The pitfalls is what we need to look at
Pitfalls.
usually because everything's going well until something goes wrong, isn't it? Yeah.
Exactly, exactly. That's
Yes.
what we want to look for.
Yep.
I'm gonna name a few, and
Mhm.
again, if someone is really, taking notes, that's the moment to take a note.
Yep.
Inadequate account reviews.
Hmm.
Not conducting timely initial or annual reviews in the fiduciary space can cost you. So
Okay.
take that bullet number one. Number two, conflict of interest
Okay.
management.
Hmm.
Failing to disclose or mitigate conflicts, especially when the bank offers investment products.
Hmm.
Make sure it is written. So if you are to create some framework, make sure you have a written policy that addresses conflict of interest. Poor documentation, missing minutes from trust committee meetings, or investment rationales could be an issue. Unclear delegation. When trust officers act outside their authority or without formal delegation, it's an issue. And weak vendor oversight. So relying
Okay.
on third party investment managers or platforms
Hmm.
without proper due diligence could become a red flag. So it is important to know that really the regulators are placing greater emphasis on third-party risk management right now, particularly
Yes,
in
they are.
in
Yep.
fintech
Yep.
integrations and outsourced trust accounting
Mhm.
systems.
Yep.
Ensure your vendor due diligence is as robust and disciplined as your internal control
Hmm.
framework. So
Hmm.
those are the points.
Svitlana, I really appreciate that, just that brief list of the pitfalls. And what's interesting to me is even though trust compliance is a very unique type of compliance, so many of those pitfalls honestly could apply to any other type of banking compliance as well. Meaning it kind of comes back to, dare I say, it comes back to common sense and a robust
Right?
compliance program overall. I'm not saying this is all just common sense because it takes a lot of specialized knowledge and, careful review and due diligence. But those pitfalls are really common pitfalls that many bankers could fall into without being careful. Um, and in some ways, I appreciate that you having laid this out. It kind of does come back to basic compliance principles, even though trust is a
Exactly.
very specialized type of
Hmm.
banking. It comes back to basic compliance principles. And I am hoping that that might maybe give some peace of mind to compliance professionals who are maybe a little bit nervous about analyzing a trust compliance program, just to keep in mind that the compliance concepts are very similar, even though the rules may be different. Do you think that's a fair way of saying it, Svitlana?
You're absolutely correct.
Okay.
The compliance principles are not that different.
Okay.
Laws and regulations that apply to the space or activities might vary depending on the
Absolutely.
product and service.
Absolutely. Yes.
But
Yes.
the foundation of the compliance blocks, the
Hmm.
pillars are still the same. And once you nail those down, it's
Yep.
like a tree. You can add more and that tree can grow, but
Yep.
you need to know those fundamentals because that's where when regulators come in and try to assess how, where to start digging, they will
Hmm.
be looking at some key components of the compliance
Yep.
program first. So, really, what I really want to mention, building a culture of fiduciary compliance. So
Hmm.
true compliance really extends beyond procedural checklists. Checklists good to have, but it should be embedded in organizational culture. So when
Absolutely.
all members of the trust department understand
Hmm.
the purpose behind the rules and regulations, compliance transforms into a collective responsibility, right? So consider integrating fiduciary principles into your day-to-day operations and bring fiduciary duty to life in everyday practice. Make it everyday thing versus being reactive.
Yes.
So once it's like your diet, you are establishing a diet for your organization. And that's what you're going to follow. So ensure that investment officers understand and apply the prudent investor rule. Have administrators, flag discretionary decisions for legal reviews, and really encourage management to model and reinforce that the client's best interest always comes first. So if we're talking about culture of compliance, that is a culture of compliance. You are making that part of your everyday diet.
I love that. I love the emphasis on a compliance culture. That's important in any aspect of compliance. I love your emphasis on how this flows from the top. Management and leadership sets the tone and sets the expectation. And similar to, going on a diet, then that expectation flows down through the whole organization. And I really love your emphasis that when you're in a fiduciary relationship, it's about the client's needs. It's not about the bank's needs first. It's about taking care of the client's needs so that you do manage that proper fiduciary, your duties under that fiduciary relationship. I appreciate that breakdown. Svitlana, we are coming to the end of our time. This time has flown by. I cannot believe that we've been talking this long already. Is there anything else you would like to add in before we wrap this up?
So, I do want to kind of summarize all the key components, all key points.
Wonderful. I love a good summary.
And hopefully that will kind of help to hug this content in a good way, right? So, number one, really understand your organization and know all specifics about the products and services that are offered through Trust Services Department. Know how your product is, the composition of the product from end to finish. When you offer the product, when you board a customer, when you provide certain services, when you market the product, know all those components. That will help you long term. Then number two, know the distinction between banking, lending, trust, and investment brokerage products and services you offer within the trust department, as different rules and regulations will apply, and that sets the tone. Number three, know your regulatory authority, OCC, state, FDA. Know that component. I know that some trust departments really struggle. They're like, well, we don't know who. I mean, we know OCC requires that. Just understand that component. Number four, maintain strong governance and documentation. Board approved written policies, clear delegation of authority and oversight from the trust committee. Number five, conduct regular reviews, audits, and staff training. Very important to sustain your program. Then number six, manage conflict of interest and ensure proper structure is built and written policies are in place. Now, number seven, ensure fiduciary platforms and technology systems are designed to meet both regulatory requirements and maintain clients' privacy and confidentiality. And number eight, promote ethical, fiduciary, responsible culture. Customer goes first, And Absolutely. Then, if your bank is expanding into trust services or refining its compliance framework, remember that fiduciary compliance is not a one-time project.
Yes.
And about avoiding fines, right? So It is about protecting your institution's reputation and your client's trust. When banks treat compliance as a partner instead of a police officer, it becomes a true competitive advantage. So use that competitive advantage.
I love that as a final note because that is something I always want to emphasize. I mean, both of us have experience working within banks as compliance professionals. We now work within the Compliance Alliance family, helping banks with their compliance needs. And that emphasis on making sure that the compliance staff is truly partnering with the other staff for a good working relationship is so important. Compliance staff is here to help staff succeed. Not supposed to be here to come in and say, oh, you broke this rule, you broke that rule. Truly, truly, the best relationship is when compliance staff can be a good resource and a good help within the organization. So I love that you ended on that note, Svitlana. That is something that I will just shout from the mountaintops whenever I can.
All right.
I appreciate so much your time and your just the way you've laid out these principles for banks to follow, especially for staff. Maybe they're newer to working with trust compliance or they're a little bit uneasy because it is different and there's a lot of different rules to follow. I think that you've laid out some principles that hopefully will put folks' mind at ease that some of the concepts are the same, even though the rules may be different. And if you approach it with an attitude of looking into everything carefully, making sure that the rules that you need to follow are being followed, some of the same principles are just going to be the same for compliance. So I really appreciate your time today, Svitlana. I do want to remind folks that if you are members of Compliance Alliance on the Compliance Hub, or if you'd like more information, we are here as a resource. And folks like myself and Svitlana do serve in helping banks to understand some of this trust activity in terms of your banking compliance. So feel free to reach out if you'd like any more information from us. Svitlana, it has been my absolute pleasure to talk with you for the past 30 minutes or so. Thank you so much for lending your time. I appreciate everything you've shared with us. I hope bankers will find this helpful. And for now, this has been another episode of Banking Matters. We hope you tune in next time.